talking, right? And so this is it, but this is AU, okay? Now, one of the things that we talked about for our triangle, and I don't want to confuse you. There's two. The cool thing about the triangle is once you understand the triangle, it just opens up the world to you because ultimately, all you really need is a trend. Okay. Once you see a trend, you have the ability to begin to form a trap. Now, here's where many of you guys mess up. Okay. Where many of you guys mess up is that you'll see it come out of the triangle like this. And you're like, okay, I'm going to go. And then the market does something like this on you. Okay. The problem that we're having is not the triangle. The problem that we're having is that you're focused just on the triangle as far as the trend line, but you're missing the biggest piece, which is the strong area of supply or demand. It's that strong area of supply or demand that causes that triangle to be successful. Okay. And this is the part that you really have to focus in on. So your triangle defense success is dependent upon your ability to leverage strong areas of supply or demand. That's it. Now, those strong areas of supply and demand change from time frame to time frame. Every time frame has a strong area of supply or demand. So on this chart right here, these 15-minute chart, um, uh, this chart right here, what we have, we'll group this, hide this for a second. There's a strong area over here. There's a strong area over here, right? Right in here, right in here, right? On this time frame, there's going to be strong areas, right, of supply or demand on this time frame. I know a lot of you guys talk about your time frames and where you want to, how you want to trade and everything. That's really dependent on you. I don't care. Someone asked me, you know, ORS seems to be a scalping strategy. Like, can I use it? I don't like the scalps. Like, yeah, if you want, it's your life. It doesn't. It's no. There's nothing preventing you from leveraging it. As a day trader or a swing trader, right? You don't see me do it just because one, that's not very for class, right? It doesn't really translate very well. Like, oh, okay, this trade, we have a new trade today, right? And what I mean is, a lot of those higher time frame trades take a long time to set up. So I can't like teach on those day to day, right? I have to let those play out for a while, right? Those types of trades. It just that's just how the market is, right? If I was taking trades off of this, for instance, let's go right here. Okay. If we would have been over here, this is September 2024, we would have seen, as we started this series out earlier, we talked about the call. You have the impulse, you have the correction. When you see this, right, we're able to use our fib areas, right, to identify, okay, this is a continuation level because this is the 38.2. So what do I expect? After this retracement, I expect this thing to make a higher high or at the minimum the same level, but typically a higher high. So what you got here is this this scenario here. Show you this real quick. We use our trend-based fib extension to find our targets and our safe TP. Safe TP would be here. Next target would be here, right? And we can see we hit target 2, right? Target 2. Now, how long would that have taken? Well, it depends on your entry method and criteria. But let's say we utilize a structure break. So one of the things I talked about the other day is waiting for bullish price action, okay, to happen around your area. So right here, this what is this right here? What is this? What is this pattern right there? Those 3 candles represent what? And man, I was in a deep sleep when my alarm went off. I was like, my initial reaction was, man, turn that thing off. It's too doggone early. And I looked at the clock and I was like, oh shoot, it's Thursday. Thursday means I gotta actually get up on this alarm. And so I'm here, y'all, but man, I was in one of them adventure dreams. We was on a mission to save the world. I don't remember all the details, but it was one of them type of dreams where you're trying to save the world. Um, Kyle in the building out of Ontario, Morningstar. Yep, good job, y'all. So it's a Morningstar. This is this is an indication of the market potentially wanting to go up right here. I won't quiz you on this, but this is a engulfing candle. Okay. Now, when I get these types of things like engulfing candles and morning stars, one of the things that I do is I learn to box those up. So what I'm going to do is make this my zone here. And so once the market created that level, what do you see? Market testing that area, testing that area. So that's what I like to see. And then from there, I want to see violations of structure, right? Where I want to see, and I look for supply levels, right? Like this is a supply level because of this bearish engulfing candle. I want to see price get above that. Where did it happen? Right here, right? Happen right here. Did a retest, came back above again. And so let's say this was an entry. Okay, we're going to talk about ORS specific entries, but really quick, I just want to highlight this, right? This is an entry, right? This is an entry. And someone may say, well, this is ORS. Can I trade like that? Yeah, because ORS is about the principles. Okay, what principles are we employing inside of here? Well, we would be allowing the trend to change, right? Trend direction is employed in this, right? Our Fibonacci, right? Our understanding of impulse and correction and how we leverage that. And the pillars are being used here, even if you don't see them, just by the nature of how they work. And so if I was to now throw on the pillars, you would begin to see that we're right on in there. So if I come over here and do this, what just happened? Well, that same stuff that we talked about, right? Of wanting to see, look what just happened. Our MACD just shifted, price action shifted above the trend direction. And I don't have it on here, but we're going to grab it. Our strength is about to change too. Right? Right in here. So everybody just flipped. Okay. If I bring this and change it to our other setting of 14, it's for sure flip. Now 5, 0, 14, 14. And we look right in here. Here's our flip, right? Here's our flip. So we're good to go. Everybody is in the building. Okay. So again, whether you turn the indicators on or not, right? It's the principles that I'm teaching you are going to go across the board. I like to see my partners here, but it's not that I can't see it without it, right? It's the same principles. I can actually see it in my sleep now. I know what my pillars are saying. It's kind of like you work with something or someone so long, you can predict how they move and how they're flowing. That's exactly what's happening here. So whether I have this on or this, right? It's still the same principle. So absolutely, this is a ORS trade right here. And here we go. Here's target one and target two. Now I bring this up to say I don't trade this way. I don't trade this way. But if you do, what is that? That is 12 days. 12 days to reach target two. Okay. 12 days. Target three or target one, 12 days. Target two, 15 days, 8 hours. Okay. So for for me, right? For me, this isn't the way that I like to personally trade. This looks really cool, but the likelihood of me doing this never happens, right? And then ultimately, it's nice to say I've been in this trade for 2 weeks and it's going in my favor, but ultimately, all this is 1 to 3, right? So 1 to 3 risk to reward. I risked 1%, 2%, 3%, whatever your percentage risk is, and this was your return. But following the same methods, that's why I just pointed out. This has been a beautiful scenario here for AU. This is this is a similar type of scenario here where we can see the patterns. Morning stars show up. We can see the shift here. But let's say I took a trade in here. Okay, same concept. Entry would be around here, around there. Okay, and even if I go with the conservative risk, right? Here's my same scenario, right? So what we just talked about, this would be an ORS trade, and what we talked about is 15 days, or I could do this in 3 hours. Okay, so everybody's different in what you want. For me, I am more of a scalper intraday. I fall in that area, but I want you guys to know if you are swing traders, you don't see me do it in class. It doesn't mean that it doesn't work. It just means that it's not my personal way of using it. But the principles that I'm teaching you go across the board. Okay, go across the board. So I want you to know that if your trading personality is different than mine, for sure you can still take advantage of these these moves. They just take longer to set up, and of course they don't come around as often. Okay, they don't come around as often. Now let's take a look at price zone for just a second. Now, price out zone is um our tool that we use to basically leverage um these strong areas of supply or demand. So what price zone does is it already pre-populates these based on its approach, and you get alerts. So if you don't have your alerts on for price zone, what are you waiting for, right? You want to get those turned on. Go up in here in the settings, and you guys would go into here and go into preferences and turn that thing on. Okay, and so you'll get alerts here. Now, the thing about it is these alerts, they're letting us know that we're in particular areas of strong areas of support and resistance, or supply and demand levels. That's where we are. And so one of the things that um, the students would ask me is like, well, how do we utilize this and this? Well, this is where it's the three-step process that has to be in your spirit, in your mind, which is I want markets to, number one, I want them to respect my horizontal structure. Okay. I want them to respect it. In other words, you don't want to take any trades, right? I don't care what style trader you are, reversal trader, continuation trader. You don't want to take any trades unless you have identified that it is at a strong level of supply or demand or support and resistance, whatever you want to say at this point. It needs to be a very strong level. It's a part of, it has to be top of your list where you're like, I see my entry. Well, did you see your level? Do you see your level? Right. Oh, I see my candlestick pattern. There it goes. My double top. Was that double top at one of your levels, or is it at a random place? Okay. Everything has to start with your level. Okay. Even if you're a continuation trader, right? Let's say we're doing this and we're like, I want to take continuation. Well, this pullback needs a level to turn around from, right? To turn around from. And so what I'm getting at is you need a level. And what price zone helps us do is it gives us levels automatically. Okay. And so a lot of students take these over into their trading view. They bring it on over and they'll transfer these levels. Okay. Now, if you're in
Hey, friend, I'm going to show you
fundamentals,
how to
then
record a
I
webcam
teach on
and a
building the foundation or
screen.
where the money resides, and we talk about drawing levels as well. And so I don't care if you're doing your levels from price zone, if you drew them up yourself. All I need is for, in the spirit of making this work, it requires levels. Everything starts with your level. Okay. Markets don't care about anything but their levels, their price points. So this is where the trading decisions make. You want to be making decisions at the levels. So when we get an alert at the level, the first thing we're looking for is to respect it. So you can see in here, we went up to here and we respected it and we came down. Here, we hit the level but went up a little bit to the top of the level, started to come down, right? Over here, we didn't quite make it to the level, but we got pretty close and we started to go up. Over here in this version, this was a break and retest. This is actually a break and retest. And if you guys can see, it's a now break and retest, right? It's a now versus this right here is a later. So this was the break. And so later it's retested it. See? It's all about your levels, right? It's all about your levels, but you need to start first with the level. So what we have with price zone is we have levels. And then from here, we're able to then make our decisions to buy or to sell, right? Our analysis kicks in and we go from there. Now, first step, respect of the horizontal structure. You want to see that the market is respecting your horizontal structure. Okay. Respecting your horizontal structure. After that, we want to see that it's disrespecting things. Okay. What's the key to the disrespect? Well, the key to the disrespect is that its behavior now is changing. Prior to 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 uh to this moment, it's just been moving like this. But all of a sudden, we reach an area where it's no longer honoring this trend. Starts to become disrespectful. What is it doing? It's letting us know it's breaking out of his boundaries, right? Breaking out his boundaries. You all seen the movies, right? You might even been the movie, right? That moment in time, you might have been that person. It wasn't me, but I saw it on. I had friends. I watched it on movies, and you have that moment where, oh, you think you could do just whatever you want to do? Uh, okay. Now that you can't respect my boundaries, you don't have to go somewhere else, right? You don't have to leave. That's what this is, right? I don't know if you were that person that couldn't have the boundaries. You couldn't respect the boundaries, and you got that first class ticket. Some of you didn't even get a first class ticket. You got man, some parents, bro. I have seen them. Okay, okay. See how you do outside. See how you do outside. That's what this is, right? That's what this is. No longer becoming respectful to the boundaries. Now that they've broken out, it's signs that, oh, you can't live here anymore. You got to go somewhere else. And that's what's happening right here. They got to go somewhere else because they're no longer in the boundaries. And so it's this combination of, first you're respecting this, but then you begin to disrespect this. This is what creates our triangle. It's this piece here. Because as I said earlier in this series, the market can't go this way. So now it completes the thing. It can't go this way. It can't go to the left. It runs into a wall that it doesn't want to break through. And so its only choice is to come up out of this and start to disrespect that. And it's this visual that you want to train your eyes to see, is this type of scenario here where the market begins to just you just see it. You don't got to draw it all the time. I don't have the whole triangle drawn all the time, but this is what I'm imagining in my head. I can see this. I hit my level. I'm starting to disrespect it. Okay. Now you got to go somewhere. It's going to go somewhere. Not as disrespectful. It's going to go somewhere. Where's that somewhere? It could be the next level. It could be any structure in here level that is in the way, but it's gonna go somewhere now that it broke out. Okay. That's how this works. Okay. That's how this works. This is more of a technical question, maybe for further in the section you're teaching on. My question is, my main time frame is 1 minute, but my T2 is 30 second. Okay. Should I drop down to 30 second even though it crosses on the 1 minute? Should I drop down? But the 30 second is good as long as I put my trend lines up first. So Kyle, you probably, if you have a chart that you want to drop in the thing, I could look at it that way because I gotta see the scenario, see the structure. You actually did a pretty good job of trying to paint it for me, but for me to really make sure I'm answering your question, if you have a chart, drop that chart in there, and I'll try to hit it. Now, you guys might see that he dropped this language in here. We haven't got into the T2s yet or T3s. That's a part of the system. We haven't worked on that yet, but we will, right? We will in this boot camp dial it in. It's more of an advanced approach, and it really requires our understanding of what we're talking about now, which is the impetus level. Okay. So this diagonal structure here, we want to disrespect that diagonal structure. So we want to respect horizontal structure. We want to disrespect diagonal structure. So you got to be able to draw your trend lines. And then the final thing that tells me that they really are going in a new direction is that they disrespect another horizontal structure. But what is this horizontal structure? Well, this horizontal structure is what we call the impetus level. The impetus level. Now, impetus, why did I call it the impetus level? Okay. Why did I call it the impetus level? Well, what an impetus is, okay, an impetus essentially is the force that makes something happen or happen more quickly. Okay. It's the force that makes something happen or happen more quickly. So for me, what makes the market change direction? It is the break of the impetus level. This is what's happening. So that's where my name came from, right? Just trying to be creative. This is this movement right here is the impetus for a new directional change in the market. And so it's this diagonal structure here, or horizontal structure that we call the impetus that we are looking for. Now, what is the impetus exactly? We'll come back over here. What the impetus is every trend has a structure where you see higher highs and higher lows. Okay. Now, what is the impetus inside of a uptrend? Well, the impetus is going to be the higher low that created the highest high. Okay. It's the higher low that created the highest high. And so what we have here is we have three lows here. One low, two low, three lows. Out of these three lows, which one is the higher low? So one, it can't be this because this is the low. This is the higher low, and this is a higher low. Okay. Now this higher low led to this. This is a higher high, but it's not the highest high. So this can't be the impetus by default because it didn't lead to the highest high. So this is the highest low that led to the highest high. It's right here. So this is our impetus level. And so we know that the market is continuing in an uptrend as long as it's staying above that impetus level. But if it decides to break, it is now chosen to change directions. And it's changing directions either temporarily or long term, and it's going to keep on going, right? All depends on what type of triangle you have trapped, okay? But this is that turning point. This is that turning point. This is the highest low that has created the highest high. Now, for a downtrend, it's the same thing. Market's making lower lows and lower highs, right? Well, what do we have here? We have a high, a high, a high. So this is a high, but guess what this is? It's a lower high. And this is another lower high in the current world. This is the lowest high. Okay. Right here, we have a low. Right here, we have a lower low. And right here, we have the lowest low. Okay. The lowest low. So what is the impetus level in a downtrend? The impetus level in a downtrend is the lowest high that created the lowest low. Okay. Now, I know I'm emphasizing, I want you guys to hear this. I'm emphasizing lowest low and I'm emphasizing lowest high. And I know we're used to seeing just that as lower high, lower low. But in your notes somewhere, make sure it's the emphasis on, excuse me, lowest high that created the lowest low. Okay. Because now you bring this out, you make a distinction between just the lower high, any other lower high. Okay. So lower high that created the lowest low or higher low that created the highest high. This is your impetus level. Okay. That's your impetus level. So we know that as long as the market is still doing that, we're good. But if it decides to go up above that, it is chosen to break out of its boundaries. Okay. And so now let's put the picture together. Here's our trend line. okay? And let's pretend that the market just hit a strong level of supply, like a price zone level. So what would we want to see? We'd want to see that the market respects the level, then disrespects this level, which is our diagonal structure. And then finally, we would love to see if it can now go and disrespect the next horizontal structure being the impetus. Okay. The next horizontal structure that is our impetus. After that, it's going to go up to somewhere, right? Where it all depends. And we're going to talk about expectations of these breaks and how you treat these. We're going to go into that more later. But this right here is the basic formula. So again, you want to do me a favor, write this in the chat. You want to respect horizontal structure, okay? Disrespect diagonal structure and disrespect horizontal structure. Do me a favor, type that in the chat. And you can put next to horizontal structure, impetus. Okay? Go ahead and write that in the chat. I want to make sure that that's highlighted in your mind. Respect horizontal structure, disrespect diagonal structure, and disrespect horizontal structure. These three principles will take you a very long way. A very long way. A very long way. This is tricky. So let's go back to your question. This is more of a technical question. In the section routine, my question is main time frame is 1 minute, but my T2 is 30 seconds. Should I drop to 30 second even though it crosses on the 1 minute? But the 30 second is good as long as I put my trend lines up first. So the answer is it depends, right? So if you're going to trade this triangle right here, then sure, go down to your 30 second because that's your T2. And you're making decisions off of that. But if you're going off the big boy, you're gonna need to go. I will tell you ultimately, by the way that this looks, that your main time frame, which is your big boy, even though it's 1 minute right now, it's the lowest time frame. One of the issues that I see here is the angle of this trend line, especially right now, the separation between the trend line and the moving average. So what's probably going to happen if you play with it and go up a couple time frames, you'll probably see that that moving average will get closer to your trend line, especially the last part, and that's probably going to be your true triangle time frame, right? But right now it's just looking like this because it's like the way the structure is. But also remember, if you take any trades out of the T2 time frame, you must have very strong uh divergence, very strong. So you want to make sure that you pay attention to that. But yep, you can do whatever you want. Just know that this is still your main time frame, and most likely what's going to happen is you're going to lose the pillars. It's going to do something like that and then still go up, most likely. And so also don't forget, where's your strong level? Okay. So that's one of the things right here. All right. Horizontal structure. Respect horizontal structure. Disrespect diagonal. Let me see. Good job, y'all. Good job. Thank you for participating. Thank you for participating. This right here is what you want to have in your mind. So when we look at price zone at its core, this is what we're looking to accomplish at all times. It just depends on what you what do you want to do, right? So let's get all this stuff off real quick. Oh yeah, I can't do that. I knew that. I'm I'm in the admin account, so I can't be deleting deleted stuff. All right. So, and just in case, let's come off of it and come right back. Here we go. Now, you guys see this over here. This is the same scenario, but except it's this is what we call, we talked about those two types of triangles. This is more of the corrective triangle. And you can see right here, here's our triangle, right? And so same principle. We want to respect the horizontal structure. We want to disrespect the diagonal structure. And now we want to disrespect the horizontal structure. Okay, the horizontal structure. And this is what we're looking for. That's our chance to say, okay, we're probably moving on. And that's exactly what we did. Okay. So this is the heart of what it is that you need. And notice that for now, we haven't even talked about the indicators. Okay. The indicators are helpful because they help to give us an objective way to accomplish this at all times. However, ultimately, the objective is to accomplish this, right? And so it's the goal is that we're really just doing this. The indicator is helping us facilitate this, okay? And I want to make a special emphasis on this that you can hit this however you want. Remember what I'm saying, when ORS is not about, oh, I got to use these 2050 crosses. I have to use the strength indicator or the momentum. It's not as much of a mandate to use these certain tools as much as it is these tools are pointing us to larger and greater principles that if I want to have success, I need to honor those principles. And then this is taking trades off of strong levels. This is paying attention to structure, both diagonal and horizontal, and waiting for that shift. Okay. And so again, however you have to see it in your mind and to get there, just let's just get there, right? You guys see me do this all the time, all the time. I'll be here and I'll be here. I'll be here and I'll be here, right? I go back and forth because this is just helping me stay objective. Well, what do I mean? Well, up in here, sorry for the sniffles, y'all. I definitely looks like I caught a little something in my travels. Okay. This right here, when I do this, what did I do? I just put myself on the correct time frame. Okay. There's an advantage to doing this. Okay. So now I know the right time frame structure or candle that I need is 3 hours. 3 hour candle to close below this impetus level. Okay. What it all what it also does, we haven't got into the T2, right? But that's coming. What it also does is now it puts me in this position. And now I'm able to organize this like this. And I can see just like this, that this is my new my T2, which now allows me to, and I know if especially if this makes a higher high, that I'm going to then have, this would be my low that made the highest high. It's the higher low that made the highest high. I don't have it yet. Right now it's here, right? And you can see the tool is sitting right here. But it's going to be here as soon as we can make this highest high. Okay. So now we're shifting and you can see the tool shifted too, right? Tool shifted right there. That's it, right? So that's our impetus level of what we call the T2. So it's going to be the same principle. I need to respect this, disrespect my diagonal, and then disrespect the impetus level right there. Okay. There's our entry. Okay, right into here. Right, just like that. Okay, so it's this respect, disrespect, disrespecting. This is what we're focused on. Okay, just like that. How do we know when to go? Well, we follow the principles, respect, disrespect, and disrespect. Now, we're sitting right here at the impetus. So, um, we're gonna break it or we're gonna continue down. I don't know. Now we're gonna see. We just landed at this is the area. This is the high, the low, the highest low that made the highest high, right? It's sitting right in here. So we're now right at that level. This was an excellent trade. I just, this was easy, breezy, beautiful. I just, I fumbled the ball on this one. Just had this chart up and wasn't paying attention to it. Okay. So we're going to stop here. Stop here. This is an introduction so that you guys could, we want to get acquainted with it. I want to emphasize this respect, disrespect, and now introducing you to the impetus level, which is the final disrespect. Okay. And so what you want to be looking at is that, um, oh man, you guys aren't on the stream. Um, and go from there. My stream is running, so I don't know why you guys are disrespected. But it's okay. I mean, why you guys can't see the stream, but my stream's still running right here. But with that being said, man, I appreciate you guys for being here. We're gonna